All right, what's up, y'all? Welcome back to another video. Today, I'm going to be learning how banks actually work. So, the learning objective is by the end of this, I should be able to understand why banks exist, how banks make money, why banks don't simply hold your money, why interest exists, and what happens when you deposit money. No, actually, why loans are so important and why banks are amongst the most powerful business in the world. Oh, businesses in the world, excuse me. But that's crazy. All right. So it says, get some water. All right. It says, imagine there were no banks. Let's go back 300 years. You have $5,000 in gold. Hey, boy. Hold on, my dog's sleeping right now. Okay, boy. Milo. All right. All right. It says, let's go back 300 years. You have $5,000 in gold coins. You hide them under your bed. Your neighbor wants to start a bakery. He needs 5,000. You have the money. He has the idea. The problem, you don't know him. What if he disappears? What if he lies? What if he dies? Your money is at risk. Without trust, money doesn't move. Businesses don't start and the economy barely grows, okay? Why banks were created? Banks solved one huge problem: trust. Instead of lending directly to strangers, you deposit money into a bank. The bank lends it, the bank evaluates borrowers, the bank collects payments, and then the bank absorbs some of the risk. Banks became professional money managers. Let me take a moment to process that. So instead of lending directly with strangers, you deposit the money in a bank, the bank lends it, bank evaluates borrowers, the bank collects payments. It's because I'm hearing a noise in the background. It's throwing me off. Like I'm hearing knocking or something. All right, let me home in, and instead of lending directly to strangers, you deposit money into a bank. Okay. The bank lends it. The bank evaluates borrowers. The bank collects payment. Oh, pretty self-explanatory. Okay. What is a bank? Most people say a bank stores money. That's only a small part of what it does. Okay. Let me think. What else can it do besides store money? It can give you a loan. I'm thinking they're going to get into credit. A better definition is a bank is a business that connects people who have money with people who need money. Okay. Some people have savings, other people need house loans, car loans, business loans, student loans. Bank sits in the middle. Okay. Meet four people. It says imagine four people. Sarah has $100,000. She doesn't need it today. She deposited into a bank. Mike wants a house. He needs 100,000. The bank lends him the money. I don't get how does that work. What if Sarah wants to take out the money instantly? I'm guessing if they're talking about physical cash. I don't know. Let's see. The bank earns money by managing the process. Okay. So it says Sarah earns interest and Mike pays interest. Everyone benefits. But wait, you might ask, how can Sarah still use her money if Mike borrowed it? That's exactly what I'm thinking. I'm thinking Mike borrowing 100,000. She ain't got nothing left. So does banks know from experience that depositors typically withdraw money at different times? Is that not still bold? So they don't keep every dollar sitting idle in cash. Okay. It said they keep enough cash and other highly liquid assets to meet expected withdrawals while lending or investing the rest within regulatory and risk limits. This is a balancing act. This balancing act is a core part of banking. Yeah, I'm probably gonna talk louder tomorrow. It's late at night. I think my mic is pretty good though. Can't lie. So why interest exists? Okay, so this is where the banks make money. Imagine you lend your friend $10,000 for 5 years. During those 5 years, you can't use your money. You're taking a risk. You deserve compensation. That compensation is interest. Interest is essentially the price of borrowing money. Example, Sarah deposits $10,000. The bank pays her 2%. After 1 year, Sarah, that makes sense now. Oh my gosh. So literally the whole interest makes sense. Like bank pays you to store money or keep money in the bank. At the same time, they tax when people borrow money. It literally balances everything. Okay, that's smart. Yo, whoever thought of that idea, oh my, yeah, they was onto something. Okay, so it says after 1 year, Sarah has $10,200. The bank lends the bank lends the same money to Mike for 7%. Mike owes 10,700. The bank earns the spread between what it's received. Let's run that back to make sure I'm processing this. Sarah deposits $10,000. Okay. Bank pays her 2%. I already know that after 1 year. Okay. The bank lends the same money for Mike, 7%. Mike owes. Oh, the bank earns the difference basically, because the bank earns the spread between what it receives from borrowers and what it pays depositors, while also using that difference to cover operating costs, defaults, and other expenses. The bank spreads between what it receives from borrowers and what it pays depositors, while also using that difference to cover. So after they cover the cost, they're left with the profit. Okay. Where does the bank get money? From depositors, checking accounts, saving accounts, certificates of deposits, businesses, governments, other financial institutions. Bank gather money from millions of people, then they put it to work at its core. So what I'm trying to think is, I'm guessing, yeah, so they don't I would imagine, I'm guessing they don't tell you if they're taking from your account, because it's so much, they're dealing with so much money. It's endless in rotation. Like money's going to keep coming and going. The bigger a bank becomes, the more endless. You can just keep rotating the money. Oh my gosh. Banks don't want your money sitting still. Imagine you own a pizza shop. Every pizza oven sits unused. You make $0. That wasted opportunity. Banks think the same way. Money sitting idle earns nothing. Money loaned responsibly. Ooh. Bruh, they are making so much money. Think about everybody. This is going crazy. So it says, why banks love mortgages. Imagine you borrow $400,000, 30-year mortgage. You repay over decades. Over that time, the bank earns interest while taking on the risk that the borrower may not repay. Long-term loans can provide a steady source of income if managed well. All right, we're going to stop here. Then we're going to finish. Next episode, stay tuned, because then we're going to get into why credit scores exist, what happens if nobody pays, why banks are regulated, the secret most people never learn. Stay tuned, bro. Go ahead, subscribe for the journey, subscribe for the process, bro. They can't stop you if you learn, bro. It's just that simple. No one can stop you. You just gotta learn.